Today, Bitcoin climbs to start the week just 3 days after the network completed its latest halving. The Binance executive on the run from Nigerian authorities is reportedly found in Kenya, and Nico Cordeiro, CIO of quant digital asset hedge fund Strix Leviathan, discusses Bitcoin's post-halving rise. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the green to kick off the week 3 days after the Bitcoin network completed its fourth halving. The key technical event reduced the rewards earned by miners from 6.25 Bitcoin to 3.125. As of noon Eastern, Bitcoin climbed 1.5% to $66,000, Ether rose less than 1% to just under $3,200, and Solana jumped 2.25% to $153. Ahead of the halving, the price of Bitcoin had been volatile. Mechanically, the halving itself shouldn't affect the price of Bitcoin in the short term, but many investors are expecting big gains in the months ahead. That's based on the cryptocurrency's performance after previous halvings. Mining stocks have also been volatile in the days leading up to the halving event, with some down by double digits for the year after rallying between 300 and 600% in 2023. Riot Platforms, for example, is down more than 30% so far this year, but it surged 356% in 2023. All right, let's talk about the top stories. Sam Bankman-Fried has agreed to turn over documents to FTX customers in exchange for his dismissal from a class action lawsuit. According to a proposed settlement filed on April 19th, SBF agreed to aid in victim recovery in a pending class action lawsuit against FTX promoters. That would include testimony and any documents within his access, like information on his investment in AI firm Anthropic. He must also produce information on a list of people and parties, including Tom Brady, Shaquille O'Neal, Steph Curry, the MLB, and other former promoters. This comes after Sam Bankman-Fried was sentenced to 25 years in prison for fraud and conspiracy back in March. He's appealing that sentence. Next, Grayscale's Bitcoin Trust is facing a steady march of outflows while its competitors gain steam. The trust has faced a 30% cut to its assets under management since its conversion to a spot ETF was approved, from $28.6 billion on January 10th to $19.6 billion as of Friday. At the same time, BlackRock's IBIT ETF has garnered soaring attention. The ETF has ballooned to $17.5 billion under management, that's according to FactSet. One of the biggest differentiators of the two ETFs is the fee charged to investors in the fund. Grayscale charges 1.5% compared to BlackRock's 0.25%. The other 10 spot Bitcoin ETFs trading in the US have lower fees similar to BlackRock's offering. Grayscale is looking to combat this with its upcoming mini Bitcoin ETF, a spin-off of GBTC, which it announced back in March. The asset manager proposed that that fund could have fees as low as 0.15%, although that number could change. Finally, Nadeem Anjarwalla, the Binance executive who escaped Nigerian custody, has reportedly been found in Kenya. Local news outlet Daily Post reported last week that law enforcement agencies in both countries were working on Anjarwalla's extradition. The outlet cited a source close to the Nigerian presidency. Anjarwalla was arrested alongside another Binance executive after the country brought tax evasion charges back in March. Binance said at the time that its primary focus was on the safety of its employees and was working collaboratively with Nigerian authorities to resolve the issue. We reached out to the Nigerian police force about this story, but haven't heard back yet. All right, let's talk more about markets for our main story. I spoke with Nico Cordeiro, the CIO of Strix Leviathan, about Bitcoin's performance post-halving and what likely will be the next catalyst for the crypto market in 2024. All right, Nico, the halving is here, it's done, and there was some discussion about just how it would affect markets given that it seemed to be so priced in. I mean, JP Morgan said to expect some declines because of that, because Bitcoin was overbought. Others told us that the price would hold or even go up right as it is right now. As of Monday morning, it seems like that seems to be true. But what are you seeing, and what is your reaction to how Bitcoin has performed in the immediate aftermath after the latest halving?
I think price action has been much in line with how it normally behaves. I mean, the big move that we saw over the last week and a half, 2 weeks, was really driven by the geopolitical instability with Iran and Israel. That had quite a negative kickback on the market. But it's since recovered well, and I think we're kind of continuing to be firm on our thesis that the remainder of the year is going to be pretty interesting and bullish for cryptocurrencies.
Yeah, talk about your thesis for the rest of the year. I feel like the big catalysts that everybody was expecting, the halving and the ETFs, have happened. They're here. What are your expectations now that we move past those events into the rest of 2024? Are there any expectations or things that people aren't talking about that we should be watching?
Well, I think the industry has a habit of kind of focusing on crypto native narratives, right? So like you mentioned, the ETFs and the halving, I don't think those are not consequential. They're important. But our thesis, really starting from mid last year, was that the Federal Reserve was on a trajectory to lower rates, despite inflation being sticky, despite fiscal spending being at record levels. And that kind of sets up a good, it is a good setup for risk, both on the technology side and on the cryptocurrency side. So, there's a long going debate of whether Bitcoin is a safe haven asset, or is it a high risk, high beta asset? And so we kind of view the latter, and we just think, generally speaking, from a macro overview, it looks pretty good for crypto.
Well, let's talk about those macro pressures, because expectations for rate cuts have been pushed back on a daily basis. It feels like we're now looking at potentially 2025 before we see our first rate cut. And in that environment, and with, if we are going back to macro pressures being the focus for crypto, how much are the expectations for rate cuts, if they are getting delayed, going to be a bad thing for Bitcoin? Is that something you're watching as a potential negative for Bitcoin?
Our view, or my view, is it's not necessarily what the rate is sitting at, but it's the expectation of how they're going to change. I think the strong reaction we saw across really all risk assets when the political instability started between Iran and Israel was is the price of oil going to skyrocket? Is that going to re-engage inflation higher? And is that going to change the expectation from eventually we're on a downward path to, oh no, now rates are getting raised again? And so that had a large impact. As the dust has settled, it seems like we're now back to our base case, where eventually they're on a downward trajectory. And I don't think it matters where we're at today for the rest of the year, 2025. It just matters that that's our trajectory.
In terms of geopolitical pressures, I mean, obviously there is uncertainty about what's happening in the Middle East. There's uncertainty about what's happening with Ukraine. We have these foreign aid bills going through Congress right now. Is any of that political pressure, especially with those bills going through Congress, something that crypto investors are watching out for? I mean, if they pass, is there going to be any sort of price reflection in the price if and when they pass?
I don't think there'd be a direct impact, but it's just more along the thesis that fiscal spending is at record levels, inflation is sticky, but we're going to continue down this path to lowering rates at some point over the next year or two. I don't think any individual bill passing is going to change that. Where the crypto market really reacts strongly is where expectations change, and so that's what we saw last week or 2 weeks ago. But things have kind of realigned and expectations are in line. I think we'll continue to see risk perform well for the rest of the year.
If I can go back to some of the crypto-specific catalysts, we were talking about ETFs earlier, and obviously one of the ones that people are watching out for are the Ether ETFs, and we could get an answer to those starting next month. And asset managers aren't as optimistic about the approval of those as they were about Bitcoin ETFs. Do you think that would be seen as a setback for the market if those do get shut down by the SEC, or will investors look past it?
I think that would initially be a setback, but investors will look past it, in my opinion. I'm kind of bullish there. I think the ETFs will get approved. I don't know the timeline, but I think that's the path we're on, and I expect them to be approved over the next, call it 9 months at some point. So that's another bullish catalyst on the crypto native side of things. Beyond that, the industry just continues to develop and build what we've been trying to build for the last 10 plus years, which is a decentralized financial economy. Today, it's kind of a joke. We're trading meme coins on Solana, not us personally, but that's generally the industry. But all of that is, the first use case, the base case, the beta for a larger financial ecosystem. And we're seeing that happen on Bitcoin today too. With the launch of runes at the halving block, we've seen transaction fees spike. There's now activity on the Bitcoin blockchain. Those are all exciting developments.
Yeah, I want to ask about the altcoin environment right now to end. At the end of the last cycle, in the middle of crypto winter, people were talking about, we'll really focus on strategy on the most important projects. And now that interest is back, we are seeing meme tokens trade again. And I'm curious if this trading environment feels any different now than it did last time. Are people still banking on FOMO for some of these meme token trades, or is there something inherently different this time around?
To me, it all feels exactly the same. It's like every cycle, people have to rediscover like the wild side of this industry, right? But I've seen a slew, probably in the last month or two, of very serious industry people talking about how the industry is all of a sudden a joke, or it's meme coins this or meme coins that. And I'm like, does nobody remember Crypto Kitties in 2017 or Ether Rocks, which are still some of the biggest NFTs in the space? I mean, this is just very typical of the space. There's some really big technological advances here, in my opinion, from rebuilding the financial ecosystem around the globe. But at the end of the day, the number one use case today is gambling. And we see that every cycle when things start to get hot.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.